Hey everyone, and welcome to this explainer. I'm so excited to dive into this material with you today because honestly, we're unpacking the exact concept that fundamentally separates the truly wealthy from everyone else. We're going to look closely at what it means to actually have an investor mindset and how to turn capital into future wealth. Have you ever wondered why some incredibly hardworking people just stay permanently stuck in that paycheck to paycheck grind, while others, who maybe don't even make that massive of a salary, somehow manage to quietly and consistently build lasting wealth? Well, the secret isn't some crazy inheritance or just getting a stroke of wild luck. As we'll see as we go through this, it literally boils down to one profound difference in how they think about the resources they have. To really get this mindset shift, we kind of have to completely reframe how we look at money. Right now, imagine you're holding $1,000 in your hand. Most people look at that grand and just see a simple expense, right? A transaction waiting to happen, like, oh, a new TV or time for a vacation. But investors see a question. They look at that exact same $1,000 and ask themselves, is this going to make me richer or poorer 5 years from now? By instantly running every big purchase through that specific filter, they completely flip the script. They stop thinking about what money can buy them today, and they start obsessing over what that money can build for them tomorrow. Section 1. Buying assets over things. Let's look at how investing your capital changes everything. Okay, let's dive into this. Picture two coworkers, and they both just got a $10,000 bonus. Awesome, right? But on one side, we have our typical consumer. They immediately chase that instant gratification, buying the new smartphone, designer clothes, maybe upgrading their car. And hey, it feels great in the moment. But our investor, they take that exact same $10,000 and purchase shares in profitable businesses, broad index funds, or maybe they use it as seed money to kickstart a small online business. They are intentionally acquiring assets that actually have the potential to grow. Now, what's really interesting about this slide is what happens when we fast forward the clock 5 years. Those consumer items, well, that smartphone barely holds a charge, the clothes are totally out of style, and the car has heavily depreciated. They essentially traded $10,000 for stuff that's now worth almost nothing. But look at the investor. Their shares and their business haven't just held their value, they've actually grown. They're actively generating income. So they still have their money, plus their money is literally out there making them more money. And honestly, that stark contrast really all comes back to this one pivotal habit: constantly asking yourself, will this purchase make money or cost money? When you train your brain to pause and ask this before every transaction, it completely changes your financial trajectory. You stop piling up all these depreciating liabilities and you start accumulating wealth-generating assets. It's a deceptively simple question, sure, but it is absolutely the foundation of every great financial future. Section 2. Finding opportunity in fear. Now it's time to learn the art of buying the dip. So when the stock market suddenly takes a dive, what happens? The average person panics. The news headlines are screaming about total financial disaster. Emotions take over, and there's this frantic, irrational rush to sell everything before it goes to zero. But think about it like this. Imagine walking past your absolute favorite store. Maybe it's a clothing brand you love or a tech company, and there's a massive sign in the window saying every single item in the store is 30% off. Would you run away in terror? No way. You'd probably sprint inside and buy more than usual, right? Because you recognize a great deal. Well, long-term investors view stock market drops the exact same way. It's not a crisis, it's a massive discount on the world's best companies. The big takeaway here is to evaluate value instead of following fear. When everyone else is reacting emotionally and freaking out, the true investor steps back and just looks at the math. Lower prices mean better value. But, and this is a big caveat, only if the underlying investment remains fundamentally strong. If an amazing company is temporarily on sale just because the general public is panicking, the investor steps right in and buys. They completely divorce their emotions from their money. Moving on to Section 3, giving every dollar a job. It's all about putting your money to work. The average person walks around with cash in their pocket and just asks, what can I buy? They view dollars merely as spending tokens to trade for goods and services. But the wealth builder looks at their money and asks, what can this money earn? They view their dollars as a workforce, and this brilliantly illustrates that process. Step 1, the initial dollar is invested. Step 2, it earns returns over many years. And Step 3, this is where the real magic happens. Those returns start generating even more returns. A spent dollar is gone forever, right? It's sitting in someone else's bank account. But an invested dollar works continuously, 24 hours a day, 7 days a week, just silently compounding your wealth. There's a really good reason this maxim is so popular among the wealthy. Make your money work before you work harder. Think about it. You only have a finite amount of time and energy. You can physically only work so many hours in a week. But your money, it has no limits. By treating every single dollar as this highly capable employee whose sole job is to go out and recruit more dollars, you detach your wealth generation from your own personal labor. So your goal shouldn't just be to stash money in a stagnant savings account. Your goal absolutely must be to put that money to work. Let's look at Section 4. Time is your greatest asset. Here we're understanding the relationship between patience and wealth. We live in a world that is totally obsessed with getting rich quickly. Everyone wants that overnight crypto millionaire story or a winning lottery ticket. But let's move to this next concept and see how true, resilient wealth actually builds, using a perfect analogy, planting a tree. In year one, you plant the seeds, and honestly, it looks completely unimpressive. You literally just have a patch of dirt and maybe a tiny sprout. By year 3, you've got a small sapling, but it's certainly not providing any real shade. But jump to year 10 and beyond, that growth accelerates exponentially into this massive, unshakable tree. Well, wealth works the exact same way. The largest fortunes in the world weren't built in days. They were built over decades of consistent, totally unexciting compounding. Bringing us to Section 5, building wealth through small choices. Here's the thing. Successful investors don't just allocate capital to financial assets like stocks or real estate. They continually, obsessively invest in their own knowledge. They read books, they study how successful businesses actually operate, they learn about market cycles, and they actively work to understand risk. And why do they do all of this? Because continuous learning drastically improves your decision-making. Trust me, ignorance in investing will cost you far, far more than any book or online course ever will. Knowledge is simply one of the highest return investments you can possibly make. And the beautiful thing about all of this is that thinking like an investor doesn't require having millions of dollars in the bank to start. You can start today, right now, with whatever you happen to have in your pocket. It really just begins with changing your internal dialogue and asking much better questions before you act. So the crucial point is, before you swipe your card, you need to ask yourself, will this increase my future income? Will it save me money in the long run? Will it help me build valuable skills? If the answer is no to all of these, you have to really critically evaluate why you're even making the purchase. Because your financial future isn't defined by one massive heroic decision. No, it's constructed from thousands of small, disciplined choices just like these, repeated consistently over a long period of time. When we pull all of these concepts together, we arrive at this ultimate contrast. Most people spend their entire lives working for money. They trade their precious time for a paycheck, spend the paycheck, and then have to go right back to work just to survive. But investors? Investors spend their lives learning how money can work for them. It is a really simple, fundamental shift in perspective, but I promise you it's a shift that completely rewrites the story of your future. I want to leave you with this final, provocative thought as we wrap up this explainer. Take a hard look at your own spending habits, look at exactly where your money goes every single month, and ask yourself honestly, are you simply buying a temporary feeling, a quick, momentary rush of dopamine? Or are you buying a piece of your future freedom? Always remember, the richest people don't necessarily have better luck, they just think about things differently. So start questioning your capital, give every single dollar a job to do, and just watch how that mindset completely transforms your world.